Have you ever looked at a tax form and felt like you needed a law degree just to figure it out? Well, you're not alone. Today, we're diving headfirst into the incredibly complex, often confusing, but absolutely essential legal language of India's Income Tax Act. We're going to try and make some sense of it.
So, to kick things off, a quick question for you. What on earth do these three terms, amalgamation, assessee, and agricultural income, have in common? I mean, they sound like they've been pulled from completely different worlds, right? One's from a boardroom, one's from a tax office, and one is from, well, a farm. So what's the connection?
Well, it turns out they are the absolute building blocks of India's entire tax system. Every single one has a super precise legal definition, and they're all found in one place, Section 2 of the Income Tax Act. And that is our vision today. We're going to unpack that very section, not by reading a long, boring list, but by grouping these key terms into themes that, you can actually wrap your head around. So here's how we're going to do it. First, we'll meet the key players in the tax world. Then we'll get into what's actually being taxed, income and assets. After that, we'll look at some big corporate moves, unpack the surprisingly tricky idea of a dividend, and we'll wrap up with some core concepts that really tie it all together.
All right, let's jump into our first section, the key players. To understand any system, you've got to know who the main actors are. And in the world of tax, it really boils down to two main sides.
Okay, first up, we have the assessee. Now, you might think this is just a fancy word for taxpayer, right? But it's actually way broader than that. An assessee is, sure, anyone who has to pay tax, but, and this is the important part, it also includes anyone involved in an assessment proceeding. That means even if you're getting a refund or if you're responsible for someone else's income, you're considered an assessee. It's a super fundamental concept because it defines exactly who the tax department is dealing with. And then on the other side of the equation, you've got the assessing officer. This is the government authority that actually does the assessment. But what's really interesting here is that assessing officer isn't one single job title. It's a role that can be filled by lots of different officials, an assistant commissioner, a deputy commissioner, an income tax officer. It's key to know this because the person handling your case could have one of many different titles. And that role fits into a much, much bigger structure. Just take a look at this list. It's a whole hierarchy, from the inspector all the way up to the chief commissioner. We're not going to get bogged down in the details of each role, but this just gives you a sense of the scale and the organization of the whole tax department. Okay, so now that we know who the players are, let's move on and talk about what they're all focused on, the stuff that actually gets taxed. This means we've got to get a real legal grip on the words income and assets. So what does the Income Tax Act actually call income? Well, just about everything you can imagine. It's not just your salary. Of course, it includes profits and dividends, but it also covers things like voluntary contributions to a charity, the value of perks you get from your job, capital gains, and even winnings from lotteries or betting. The main takeaway here is that the legal definition is incredibly broad, which lets the government cast a really wide net. Next up is capital asset. The basic definition seems pretty straightforward. It's any kind of property you hold, whether it's part of your business or not. Sounds simple, right? Well, not so fast. This is where the law gets really interesting because the real definition is all about the exceptions. And this slide lays it out perfectly. On the left, you see the broad stuff that's included, but now look at the right column. The Act specifically excludes things like the stock you hold for your business. It also excludes personal effects, but then it makes exceptions to that exclusion. So things like jewelry, paintings, and art get pulled back into the definition of a capital asset, even if they're personal items. It's complicated. And the rabbit hole goes even deeper with agricultural land. You might think, oh, farmland is always exempt, but nope. Its status as a capital asset depends entirely on where it is. As this table shows, if your land is within a certain distance of a city of a certain size, it is considered a capital asset. For instance, any agricultural land within 8 kilometers of a city with over 1 million people is a capital asset. The law is that specific. Okay, let's shift gears from personal assets to the big-time corporate world. Our third section looks at what happens when companies go through massive changes. The Act has very, very precise definitions for these big moves, like mergers and splits. So here you can see the two main types of restructuring right next to each other. An amalgamation is basically a merger, and a demerger is a split. And for each one to legally count, there are some really strict conditions. All the property and liabilities have to be transferred, and the shareholders from the old company have to get shares in the new one.
And believe me, these definitions matter a lot, because if a company gets it wrong, the tax consequences can be huge.
And if you want to see just how detailed we're talking about, check this out. In a demerger, how do you decide how much of the original company's debt goes to the new company? Well, you don't guess. The Act gives you a literal formula for it. It makes sure that the debt is divided in the same proportion as the assets. It is meticulous stuff.
All right, on to our fourth section. We're going to tackle a word we all think we know, dividend. But in the world of tax law, it's not just that profit-sharing check you get. The definition is much, much broader.
So here's the deal. A dividend isn't just one thing. It can be any distribution that releases company assets, like when a company liquidates. But here's the big one to watch out for. For certain private companies, even a loan given to a major shareholder can be legally treated as a dividend. And that is a huge gotcha because it means that loan suddenly becomes taxable income for that shareholder.
And just like we saw with capital asset, the definition of a dividend is also shaped by what it is not. So, for instance, a loan from a company whose actual business is money lending is, logically, not a dividend. And giving out shares as part of a proper demerger isn't a dividend either. Knowing all these exceptions is absolutely crucial for companies so they don't accidentally create a massive tax bill. All right, let's head into our final section and bring this all home with some of the most fundamental definitions in the entire Act. Seriously, these are the absolute basics that everything else is built on.
First up, the word person. Now, in everyday conversation, a person is a human being. But in tax law, it's a whole different story. A person can be an individual, sure, but it can also be a Hindu undivided family, a company, a firm, a local authority, basically any legal entity the law recognizes. And this wide definition is so important because any of these can be an assessee. And speaking of companies, the Act makes a really important distinction between a company in general and an Indian company. A company can be pretty much any corporate body from anywhere in the world, but an Indian company specifically has to be formed and registered under India's laws and have its main office here in India. And trust me, this distinction has huge consequences for how a company gets taxed. So after this whirlwind tour of Section 2, what's the bottom line? Well, a few things. First, the law is all about being precise. Every single term is defined in painstaking detail. Second, the definitions are loaded with exceptions and conditions. A lot of the time, what something isn't is just as important as what it is. And finally, context is everything. Simple words we use every day, like person or income, take on a whole new, much broader meaning inside the Income Tax Act.
And that's a wrap. I know it's a lot to take in, but really, understanding these definitions is the first step to decoding the entire system. Which brings me to one last question for you. Out of everything we talked about today, which one of these legal definitions do you think is the most important for the average person to know? Drop your thoughts in the comments below. And hey, if this explainer helped clear things up for you, please do me a favor and hit that like button, share it with someone who might find it useful, and of course, subscribe for more deep dives. Thanks so much for watching.